Welcome to the deep dive. Today we're digging into Brian Pezim's approach to swing trading. It's all laid out in his book, How to Swing Trade.
Yeah, and our mission here is really to break down his model for you. It's quite structured, almost like a business plan for trading.
Exactly. He doesn't just see it as, holding stocks for a bit. It's methodical. Rules, processes, repeatable stuff.
And what's interesting is how he got there. Started super small, right? Just one share of Bell Canada from his dad.
Yeah, humble beginnings. But then came the dot-com boom and bust. Made a fortune, lost a fortune. Those painful lessons kind of forged this swing trading discipline he talks about.
Right, and that leads to why swing trading might appeal to you, the listener. It's sort of a middle ground, isn't it?
It really is. It's perfect if you can't or don't want to stare at charts all day long. You're holding positions, maybe a day, maybe a few weeks.
So less frantic than day trading, but definitely more active, more control than just long-term investing and hoping.
Okay, let's get into the core philosophy. What really jumped out at me, and I think it's maybe the biggest takeaway, is his golden rule.
Capital preservation.
Absolutely. He hammers this home. Never risk more than 2% of your trading capital on any single trade, period.
And that sounds simple, but it's huge. It's not just about avoiding one bad trade wiping you out. It's psychological, too, right?
Yeah.
Keeps you from chasing losses when things go south.
Keeps you in the game. But, okay, even with a 2% risk, losses happen. How does he advise handling the emotional side?
Well, that's maybe the toughest part. He stresses emotional detachment. The market doesn't care how you feel. You just have to accept a loss, log it in your journal that's critical, and move on.
Don't take it personally.
Exactly. That journal becomes your feedback loop. See what works, what doesn't. He also mentions, basic health stuff. Stay healthy, mentally and physically, because your state of mind affects your decisions.
Makes sense. Stress leads to bad calls. Okay, so mindset and journaling down. Then he lays out some pretty firm rules for actual trading. What's rule number 1?
Rule 1. Avoid holding positions through earnings announcements. He basically calls it gambling.
Like spinning a roulette wheel. Too unpredictable. Okay.
Rule 2. Steer clear of penny stocks and those OTC markets.
Yeah. Tempting sometimes with those huge percentage moves you see, but
super risky. Prone to pump and dumps, he says, and liquidity can just evaporate. You might not be able to sell when you want to. Not worth the risk.
Got it. What's next?
Rule 3 is about not spreading yourself too thin. Avoid overexposure. Stick to just a few really good setups you can actually manage well.
Quality over quantity. And rule 4 sounds fundamental.
It is. Always know your exit before you even enter the trade. Define your stop loss. Define your profit target. That's what separates, professionals from gamblers.
Plan the trade, trade the plan. Okay, so those are the guardrails. What about the actual strategies he uses?
He outlines 3 core ones. The main one, his kind of workhorse, is scanning for daily technical setups.
Like what specifically?
Things like breakouts, ABCD patterns, support bounces. He's looking at price patterns, candlestick charts, indicators like moving averages.
He uses free tools for this.
Yeah, FinViz, ChartMill. He filters for stocks with good volume, usually above $2, moving above key averages like the 20-day or 50-day. Often does this scanning on Sunday night, prepping for the week.
Makes sense. Strategy 2.
Gap plays. This is about trading the reaction to overnight news. If a stock gaps up, say on good news, and holds most of that gain through the day, especially into the close.
That's bullish.
Right. But the key is waiting for confirmation. Strong volume, closing near the high. Don't just jump in at the open. Wait to see if buyers are really committed.
Patience. Okay, and the third one sounds a bit more explosive.
Yeah, hot sector mania. This is less frequent or can be powerful. It's about capitalizing when a whole sector gets hot, like blockchain did a few years back.
Like that Long Island iced tea company changing its name.
Exactly. Renamed itself Long Blockchain Corp. Stock jumped like 200%. Pezim's point is, watch the chart, get in when the crowd surges in, but be ready to get out fast when the hype dies.
Ride the momentum, but don't overstay your welcome. Okay, strategy is one thing, execution is another. How does he approach actually placing the trades?
Precision is key. Enter on breakouts with confirmation, like rising volume. Use limit orders, not market orders, to avoid bad prices, slippage.
And exits.
Stick to your predefined stop and target. He sometimes scales out, taking partial profits at the first target and letting the rest run with a trailing stop. He also likes OCO orders. One cancels the other.
So you set your stop and target together,
yeah.
And if one triggers, the other cancels automatically.
Right. Helps take emotion out of the exit. It just executes the plan.
So bringing it all together, what's the final message for someone listening?
Treat it like a business. Have a routine. Set goals, prep your watch list weekly, journal your trades daily. It's about consistency, learning, adapting.
So, to wrap up, Pezim's approach is all about discipline. Strict rules, clear strategies like scanning, gaps, and sector plays, precise execution, planned exits, and constant review through journaling.
It's definitely not about trying to be right every single time. It's about managing risk, catching the opportunities that fit your plan, and just steadily growing your capital.
A marathon, like you said, not a sprint. So, here's a thought for you listening. What's maybe one small rule or habit from this deep dive? Could be the 2% rule, could be journaling, could be pre-planning exits that you could maybe try applying to how you approach decisions this week.